Hey, are you one of those self-employed Canadians who tried to get a mortgage and got turned down? Did the banks tell you, "No, no, no, no"? Buying a home while being self-employed just got easier. But understanding if these new CMHC changes apply to you though, has not. That's why I'm here, to help you out. Now, I've always been self-employed, and applying for financing is just one of the most frustrating processes that you could go through. People that would work for my company before could buy a new house, but me, it was just so much harder, super frustrating. Now, the CMHC, the Canada Mortgage and Housing Corporation, has announced new policies to help self-employed people qualify for mortgages. Now, why is this such a big deal? Because 30% of the working population is self-employed in Canada, but that is estimated to grow to 45% in just the next 2 years. So when rules are announced that give greater respect to the freelancers, independent contractors, the small business owners, and the on-demand workers, it has the potential to help a lot of people. Will these rules help you buy your first home? Maybe refinance your existing home? Let's take a look. First off, if you want to buy a home in Canada with less than 20% down payment, you are required to purchase home default insurance from the CMHC. Now, this is an insurance that protects the lenders from you not being able to pay your mortgage. And this is true for everyone, not just self-employed people. Some lenders require the home insurance to be bought regardless of how much is being put down. Because remember, it's the lender's criteria that needs to be met. Now, these rules are for people who have been self-employed for only 2 years or less. So if that's not you, they don't really apply. And the reason for that is because after that amount of time, a self-employed person can more easily produce the documents that show their incomes, but prior to this, it's far more difficult. So if this does apply to you, and it does apply to many, there are new factors that the CMHC are suggesting can be used by lenders to support their decision to issue a mortgage. The CMHC said those factors could include such things as acquisition of an established business. Now, of course, that makes sense, right? If a business has been profitable and had been around for a while, then it's likely to continue to be so. So it's not brand new and not the same risk as a new venture. The next criteria is sufficient cash reserves. So the message here, guys, is just simply save your money. If you want to own a home and start a business, then you're going to need to plan in advance. You've taken a risk. Now you're asking the banks to do so too. So having savings to back it all up, it reduces the lender's exposure. And now instead of just being dismissed based on the fact that you're a brand new business, your application can be considered on a case-by-case basis. What is sufficient cash reserves? I don't know, but it depends on the mortgage you're getting, and it's going to be looked at simply by your mortgage broker and by the individual lenders. Predictable earnings. Now, this is a big one. There are a lot of jobs where you may be an independent contractor, but you are steadily working and making a predictable return. Now, for these people, the old way of doing things were just frustrating. It just didn't feel like it made sense. And now, if you can show that your earnings are predictable and consistent, then your application can be considered. The next criteria is previous training and education. This is another obvious one. Like doctors, for example, they're often small business owners. If your training and education has set you up on a career path that leads to success, and you're already on your way but haven't put in the time required by lenders, you may now be able to qualify earlier along the way. So if you're self-employed and you've applied for a mortgage, it can feel a bit like you're just fully naked, fully exposed. They want to see everything. Hey, what did you spend that $200 on last month? Why was there a deposit to your account for $600 on May 17th, 2017? Right? But now there's a broader range of document options that exist that could be used to satisfy the income and employment requirements to qualify self-employed borrowers for a loan. The first document is a notice of assessment that is accompanied by a T1 general tax form. 2, proof of income statement from the Canada Revenue Agency. And 3, a T2125. It's a statement of business and professional activities. In reality, if you are self-employed and have been for some time and still don't qualify, it might have nothing to do with those requirements. It could be your credit score, your debt load, and the fact that in the last decade we went through 2 major recessions. Don't give up hope though. Getting approved for a mortgage is all about understanding your finances and then setting up a plan to work towards that goal. Believe me, it can be done. I've been a self-employed business owner for a long time and had to play by the old rules, and it was challenging. But if you make a plan and you stick to it, you can also achieve home ownership. For many people, owning your own home, it's part of the Canadian dream. Working for yourself, carving your own path, building a business, this is also part of that dream. So why would you be penalized for that? Because it's the hard work and long hours of those entrepreneurs that create new opportunities and jobs for other Canadians. Hopefully these new rule changes will make it possible for Canadians everywhere to realize their dream of home ownership. If you're curious if these rules apply to your specific situation, or if you have any questions at all about the housing market, buying your first home, or what you can do to set yourself on the right path, give me a call. Not only can I help you get in touch with people who you can trust to find out what your options are, but I can use my experience in my own business of designing and building to help you make a solid investment in real estate and in your future.